Okay, now there's some extra my predictions of the stock market over the next 10 years according to some like some basically like metrics kind of not really. Mm. So there's a P/10 ratio. So or it's called a Shiller PE ratio. I'm assuming you guys have heard of PE ratios. Okay. Well, the P/10 ratio is a valuation measure for equities that uses real per share earnings over 10 years. So the P/10 ratio also uses smoothed real earnings to eliminate net income fluctuations. And the P/10 ratio is also known as the cyclically adjusted price to earnings, or CAPE ratio, or the Shiller PE ratio. So basically, it's like a smoother evaluation method for a stock or like the an, or like a stock or an index or like the market. So the current Shiller ratio is 35. You can see here since 2024, March 22nd. The the P/10 ratio versus 20-year stock market return, as you can see from the chart here. So like there's two main lines here. This other line isn't really highlighted. So you can see there's two main lines here over here and over here. So this here is the annual total return over 20 years, and this is the P/10 at the start of the 20 years. So you can see these like there's a bit of a correlation. This is our P/10 right now, so 35. So you can see from this line, it kind of you can see from this line here, it kind of corresponds to um this point in the graph. So about less than or equal to a 7% annual return over the next 20 years is predicted over by this P/10 ratio. So this can like maybe like predict returns over the next few years. Besides the P/10 ratio, there's also a normalized P ratio. This is another valid predictor of long-term stock market performance. As you can see from this chart. Mm. Our P ratio is around this area. This normalized P ratio is around this area. So this corresponds to about a 2%-ish return for the stock market. So 0 to 3% annual return over the next 10 years. So both predictors imply that the annualized return of the market over the next 10 years ranges from 0 to 7%-ish. What do you think this means for the volatility of the stock market? Does anyone want to share? Hold on, does anyone want me to repeat something first of all? Okay. Valencia?
Um, uh, uh, I think this means that overall the stock market will still grow, of course, but it would have up and down.
Yeah, excellent, Valencia. So I mean yeah, the stock market will probably, I agree, will probably also grow, but it doesn't look at it's gonna be growing that much according to these particulars. So situation one is here where the stock market slowly goes up over the next 10 years. Situation two is the stock market experiences a large surge upwards, then a sharp decline, followed by a pattern of alternating rise and falls. So do you think, honestly, that the stock market will look more like this, or like situation one or situation two? William?
I feel like the stock market's gonna have like a lot of ups and downs. And then I also feel like within the next 10 years, it's definitely gonna change. And some stocks are gonna become better, some stocks are gonna become worse. So I feel like if we invest in stocks now, like it might be a lot better than if we invest in it like next year, maybe like 2 or 3 years later.
Yeah, it's always like best to invest early, right? Um, So Max. Hmm? Uh, Max, do you want to answer? Hold on. I don't think I can hear you if you're trying to talk. Mm, okay, whatever. Well, you can like think about it later then. Can you guys hear me? Okay. So both predictors
Uh,
and
okay. Wait, can you hear me?
yeah,
Now you can?
yeah, now I can.
Okay. Okay. Uh, so I also think it's the second situation, generally speaking, because in the past, it it has gone up and down a lot. Like over like in 2024, like it went up generally, and then when Iran and Israel uh like almost had like conflict, it sharply dropped, and then it went back up after it was like peace again. So I think that's gonna be like the trend for majority of the time.
Yeah, interesting, Max. So I believe the stock market will probably have like kind of a combination. I believe it will go up and down a lot too. So both predictors imply that the annualized return of the market over the next 10 years ranges from 0% to 5%. You can see from this chart. Actually, in 2022, SPY had a loss of 18.17%, and in 2023, it had a gain of 26.19%. So while you might think it might end up with a pretty large positive return, it actually ended up with an annualized return of 1.62%. Because if you, if like a value of a stock or something, as I think a famous investor once said, if something goes down 50%, it will have to go up 100% to like go back to its original position. And in QQQ, 2022, it had a loss of 32.58%, and in 2023, it had a gain of 54.85%. So a total return of 2% approximately. So you can see this kind of matches the predictors because the predictors like predict like or imply that the annualized return will be from 0 to 5%. So far, not too great overall. But I believe the market it will still have gains, but I believe it will not be like the best in the near future.